Welcome to our today's feature presentation, Stock Trading and Investing Strategies. This presentation shall give you an inside knowledge of how to make good decisions based on several time frames when you are trading stocks or ETFs in shorter and in longer term investments. My name is Thomas Barman, and I want to make you aware of the risk in trading that we are acting here as educators, not as broker dealers, and past performance cannot always be taken indicative for future results. With that said, let's dive into the details. Trading and investing, what's the difference? The difference is in the perspective of time. When you day trade, for example, you are holding a position only for the day, so you open it during the day, based on a meaningful judgment, and you close it the same day. That's a day trading. Swing trading, you hold it for a couple of days, maybe a week, and short-term investing a couple of weeks, and long-term investing on that side we see you are holding a position for a couple of months or even years. We want to show you today of how to find meaningful basis for making a decision on short-term, mid-term or long-term investments. Let us pick Apple for an example. Apple fundamentally is a wonderful company with wonderful products. But is it a good time to invest or to trade Apple? We need to find a base where we can make that judgment, because the underlying change in supply and demand must be there for us as private investors, so that we can see where the big money is pushing the chair to the up or to the downside. Lately it was a little on the downside. Let us go and find a look at a system that helps us to define where price is going to go with a high probability. What you see here is a never lost trading chart where we frame upwards momentum or trends in blue, downwards in red, and we have specific points where we say, oh, here our indicators say there might be a good buy point, but not only that we know it's a good point to buy, we also define a target where to best get out, and the target 2. And after target 2, there's an 85% likelihood, based on our analysis, that the price will either halter, retrace, or even reverse. So you see here what happened. So with that system, so you get clear buy points and a buy threshold. Yeah, so here you have two systems combined, and I want to make you a special offer on that. If you're interested, that's never lost trading trend catching, the gray signals, and top line light, the blue signals and red signals here on the chart. So here, easy, you were able to specify either to go along with the stock, to go along with a call, and you had a clear perspective of how far that price move is going to reach from the get-go. There are some supporting underlying studies, which you see here on the volume, on the comparison indicator, on the correlation indicator, and here balance of power, that help you to substantiate your decisions. But the key here in that chart is acting on the price chart. And you saw here we were following the way up with a clearly defined target. Let's see how we follow the way down, highlighting the situations. Here, after we started struggling to go up, there was a clear sell sign and a target formulated on the gray signals. We want to be 1 to 3 bars at target. That's what's happened here. And you saw here on the second again, and there is about time to go. So with these systems, we always put you in charge for having the situation where there is a high probability move to the one side, here to the downside, or here to the upside, and clearly defined distinct targets formulated on the chart, so that we can put our risk and reward in relation. Because you see also here the crossbars here, the red ones, those are stops, and the trailing stop is signified here with that red line. If you took a couple of more positions, not take them out just at the first move, trying to aim for a bigger move, and the same here on the upside. So the red line goes from top to bottom, bottom to top. Let us see how such a system performs if you are a 401k or IRA holder. And I'll look at 401k example first. Yeah. So here, when you see 401k examples, that's a typical setup between T. Rowe Price and here a couple of Oppenheimer funds. And so the first ones all kind of go with the overall S&P 500 development. So if you are a 401k holder and you want to make decisions, have a good system. Just don't follow the papers that the issuer is giving you. Look at the details. And so what you see here is the SPY development on a weekly chart, because that's the reference, the S&P 500 for the large caps. And you saw here The red line, as I explained to you, that was the stop line to the upside. It was here taken out in a week of 10-8, yeah, hit. And so there it was time for you to go and get out of these investments. And it would have saved you, based on today's closing, a 9% loss. And that's a substantial bettering that you can do within the right system on board, helping you to go to the upside or to the downside. And you see here on a weekly chart what we have now, there's a lot of ambiguity. And that's also what we encourage you for. If you make longer term decisions, use a weekly chart or even a monthly chart, and it helps you to specify. And here's a 401k holder, 9% bettering. I'll look at the next where I say, okay, what's, for example, the American fund Euro Pacific? How can you specify how that is going, when to get in and out? The system, again, we go on a weekly chart. We even were able to put that symbol up, and our system portrayed it right up there. And it tells you it may go away, yeah, because here again, we were hitting shorts and had confirmed signals to the downside. And had you done that, had you gone out of this, it would have bettered your position compared to today's value by 13%. That's again substantial. When the stock market is under pressure, often gold is discussed. So what's the system telling about gold? Yeah, let's do it the same way and manner. We take a weekly chart on gold, and you saw here, okay, for a long period, again since May, we were going rather short than long in gold. Yeah, so you saw here the trail line. There we basically swapped to the other side, and it told here buy gold if the next candle ticks it out, and it did. So if we did that and went out of the position or short, we were making a 9% on this perspective. And when we went with the system's proposal to the upside, made another 3% to the upside on just straightforward money, not on a gold contract, not on a futures contract. You know, there are other abilities within that. I just used here the GLD, the ETF, comparing it to a 401k holding. When we look at the same from a day trading perspective, and we say again, let's see how the system performs and what it tells us. And that's just a recent chart on Apple. So you saw here for a long period of time, no signal. Then here at 12:20, there was a signal at the closure of the candle, formulating out two targets, and target 2 got hit right here in that candle for moving it out. But what is it going to tell you? Look, if you have a system in place that gives you high probability setups that can do that from a shorter term basis to a long term basis, you follow the same decisions over and over, then you have an edge. Here you see with what we call the spool. The spool here is $1.40 per 20 minutes. It's 0.9% of the share value. The trend was up. It is candle number 2 on an uptrend, and clearly defined target, stop, and relation risk reward. 1.1 means for $1 of risk, you're expecting $1.10 of reward. Yeah, so this is all together giving you a clear outline of what is possible when you have systems in place that follow the overall price move and initiate targets at entry so that you can balance your risk and reward and trade with the odds in your favor. Let us now look from a swing trading perspective, and again, we're going to look at the Apple share, but instead of now taking a weekly chart or 20-minute chart, we take a 4-hour chart, which is very telling. Yeah. So you see here on a 4-hour chart, first trade situation here on the left and a couple of more on the right. So how did it pan out? Yeah. So you saw here clearly defined target hit. Yeah, and we are out of it again, but also on the short, yeah, big turnaround on a 4-hour chart. And again, when target 2 was reached, that's our philosophy, 85% of the moves are over when target 2 is reached. So therefore, we want to leave our trade. And you saw here very favorable risk to reward at the target 1, but in particular, much bigger on the target 2. And again, here you can trail with your red line. So this system is combining powerful signals to the upside, to the downside, helping you on multiple time frame to make good decisions in going forward within trading stocks, their options, or any other assets. Yeah, and there's some imperatives to stock trading where we say, look, take a note on this. The dimensions of a good stock trade are composed of the following: a minimum price move of 20 cents or 0.5% of the stock price, an average daily volume above 1 million, because then they are not doing erratic jumps and changes, and an option chain with solid volume between bid and ask spread, because what you want to have is the ability to repair your trade, and I show you in a quick calculation later why that is so important for a stock trader. When you are trading stocks, there are multiple strategies and they can be applied in different ways and manners. And let us first summarize what we all can do. You can go straightforward long or short in the stock. You can work with a protection. Yeah, there's multiple good choices with protection. You can buy a long call or long put. You can sell the premium. Yeah, or you can make combination trades. In that presentation here, we're going to focus on that center. Yeah, these 4 different strategies and compare them in a short overview. When you see here, you trade for a 2% risk and a 2% reward. Yeah, it's a one-on-one risk to reward, easy to repair. Yeah, I say so because I can show you methods how that can be easily done. And you can use all account types as long as you go long. For short trading, you need to find yourself with the SEC regulations, minimum holdings of $25,000 and a marginable account. Yeah, so not a cash account. Yeah, so here stocks with protection. There you see, oh wow, when I go with a protection, can make a meaningful return, reduce my risk, and so therefore I have an edge. Yeah, might not even ever have considered that, but we can show you those methods where you can trade with an edge by applying the right strategy. And the same happens here if you sell puts or calls. Again, you trade for a meaningful high return on margin here on this one with a great relation risk reward. All those strategies are applicable, and the chart shall tell which of these strategies is the most apropos for the situation that comes off the chart. And we teach that. Our teaching is always one-on-one because over the 10 years we are in business, we haven't had 2 of the same traders with the same risk tolerance, the same preferences, the same time they can invest in making decisions for trading. Is a day trader, a swing trader, a combination of? So we always focus on you, the person you are, and how we can help you to find situations and to find strategies that suit you best, striving for high returns in the long run. However, all of this, what I'm saying here, is not a guarantee for you to make money. It is giving you the basis of what is needed, because if you don't have those tools on hand, it's going to be difficult to come out making money long term within trading stocks or any of the other assets. So first of all, you need a system that finds you stocks ready for a directional price move. Then on the other hand, your system has to have a predictability above or at 65% or higher. Yeah, then you need an odds-based position sizing, because not all trades deserve all your money, or not all trades deserve prorated investments. And I show you a couple of examples on that. And you saw prior, trading strategy should go about the situation which is on the chart. Yeah, when you see, for example, there is an overhead resistance and you want to go long in an asset, then maybe selling a put might be the right strategy. And if you want to do that with a cover, we can show you how that is done within making meaningful decisions between the premium you receive and the premium you put in for a cap. Yeah, and know how to execute the trades when needed, or trade repair will make a world of a difference. We do you a little calculation on that. And sure, solid money management, you want no drawdowns. Yeah, all of that together has to be combined here, from stock finding to predictability, to position sizing, trading strategy, trade repair, and that you know from the beginning when this and this happens, that's what I do instead of taking the stop loss. That's actually where our name comes from. Never stop loss trading, but it was a little lengthy. We repair the trades and we try to prevent drawdowns, because if you run down your account by 50%, you need to make 100% to break even. That's a bit of a challenge. How do we help you to find those opportunities? There's 2 ways, yeah? We have an email alert, like the Stock Alert. It tells you which of the stocks have favorable setups where you can assume a stronger directional price move, or at least a haltering move, and with that put the right trading strategy. Or on the other hand, if you have our top line scanner, then you can find those assets, letting the computer run from your house or your home, a scan telling you, okay, this is where the price action is happening. This is what I want to be part of. And I'll make you an offer here, which I hold because I will keep the video on, which I hold by the year end. If you write me an email, Stock Alert, your first and your last name, I need no credit card, no nothing. I'll send you the Stock Alert free for a week that you can see which of the stocks we put on focus. And I also sent you a little video of how to read that alert because it's an Excel based, very, very detailed alert. And you can be part of that subscribing for free by just sending an email here to contact@neverlosttrading.com. And so we usually start out with sending that to you on a Saturday till the remaining Friday, and then you see if that is something that helps you, or you can see if our systems give you a high probability and meaningful entries and exits right from those Excel sheets. Here's a short glimpse through the Never Trading Stock Alert. So we always look through the different sectors and the overall S&P 500 and see the development of the sectors to each others, measure the momentum, measure the trend, and give here the ones who had at that point in time where we measured potential upwards moves. So you saw here financials, we had a potential up move, here the consumer staples, potential down move, and those we compare. In the next step, then what we do is we say, okay, those were preferred stocks that have setups that we like. It's not always that many, but at that day here, November 26 for 27, what I took the report from, there it was, and it has to be confirmed, the price move. You saw we work with a price threshold, and we formulate that in a bag of giving you an idea where the entry and where the exit is supposed to be. Then we focus a little bit on option strategies for option players. That's something we teach very much in particular. And here, as you can see, we also list all stocks that qualified with our never lost trading signals. Again, as said, if you subscribe, I'll send you a little video that explains of how to read that and how to make use of these Excel sheets and the highlighted individual stocks, because there you will see here for the ones that we selected, the last price, critical price point, entry price, that's the price threshold for buy stop or sell stop order, and also it formulates price target 1. And you see the reward to risk here. This is strong, 1 to 0.8. So we have a lot of strong developers over here and giving you the chance to participate in it. If you're an option trader, you better learn all the details. But here we give you also an idea for the maximum amount to pay for an option with 30-day to expiration, 20 or 12 days. Shorter term, we rarely buy except we trade from like a 4-hour chart. Then we want to hold for 3 to 5 bars, so that's 2.5 days. That makes also shorter term options applicable for trading. Let me show you 2 examples from that alert here. So one was Cisco. It was clearly spelled out where. Target was spelled out, and you see here target 46.97, stop 45.06, favorable 2.5 to 1. That was a great investment, but what I show you here to the upside, you saw also here to the downside, we had our target 1, target 2, and they were always also captured. What you look at here is a Cisco daily chart, and here a dashboard, always measuring the SPO, measuring the return on cash at that SPO, the overall trend, and giving you clear ins and outs in respect to risk and reward. Yeah, and so there was another of those trades from that. United Healthcare had its entry here, and no doubt about it, had its move to the upside. And what you see here in that purple line, that line gives you an idea of the historic development, which institutions often look at. And you saw between those price points, usually that was strong, but we are taking clear action at a buy stop order here to the upside, having a clearly defined entry, stop, and target when we do the trade. And we are doing that over and over. With that, we want to summarize here. Investing and trading consistency derives from putting together a system with high predictability, clearly cut strategies that you apply based on a chart situation, and you need an opportunity finder with multiple time frames. You saw we talked about weekly charts, daily charts, 20-minute charts, clearly defined entries, exits, and stops, and trading with the odds in your favor. You see, we are helping you to manage the complexity of trading by knowledge and by system-based decisions. Here on the money side, odds-based position sizing. What does it mean? It means that we give you programs that help you to decide how much is an investment worth. So we take here the Cisco example that I showed you on the chart. And so if your average investment in one lot is $20,000, so then it tells you here, okay, buy 600 shares, leverage a little in it because your opportunities are favorable, expect a $783 return over $369 risk. So very solid, good trade. If you, on the other hand, want to trade options, call options on this, buy 16 contracts, expect a $576 risk over a potential $756 return. So if you don't have systems in place like that, either develop them or rely on somebody that gives you odds-based position sizing. It will make a world of a difference to your returns, and you can do that on multiple and all price levels, and we teach you of how to apply those. Let us move from strategy to a plan. And what we do with our clients is we always formulate a plan, a written plan, individually for each person, listing under which circumstances we trade, put together a financial plan. So what should be your expectation? How many trades, different returns, what time frames to focus on, what trading instruments, action plan, how to prepare, how to always have a fallback position if something goes wrong, repair the trade. That's all written. We write it together with you so that you have a menu, a clear guidance, like a pilot going through a checklist, check, check, check. Then you'll go on the road and you'll do your trade when everything is right for you. Let us spend a short moment on hedging and repairing. Hedging is a bigger topic, but it's not complicated. If you take the S&P 500 on today's value, they represent $135,000 of stock in one futures contract. So with that, you can balance your portfolio if something goes wrong, but you need to know system-based and time frame based when to enter and when to exit in such a hedge and how to apply it. I show you here the repair method that we propagate of why it makes such a difference if you can apply it and if you know about how to repair a stock trade. So imagine 100 trades winning 65. On the left-hand side, we do not repair. So you win 65 dollar for a dollar, and you lose $35, dollar for a dollar trade. Gives you a balance of $30. However, when we win 65 and we can prevent 60% of the losses or only make about 40% of the losses originally assumed, that gives you another $14 of return, giving you a balance of $51, which is 70% higher than your originally expected return. And this is why it's so essential to repair trades, and we definitely show that in our mentorships when we are working with our clients, because it's an essential tool for making a difference for your return, short and long term. With all the details given, you see trading stocks or also other assets, there is a complexity, but we can decomplex it with knowledge and with skill. And this skill and knowledge we want to give to you and want to make you an offer. Our systems are server installed, so you don't have to put anything in. We install the software for you. It's all real-time data. We have clear-cut entry, exit, and stop right from the chart on the dashboard as on the buy or sell point at the chart. We help you with the position sizing. You saw the odds-based position sizing. We help you for the time in the trade because every signal is clearly defined by which time shall it reach its target, else we close the position. We do risk handling and definitely put everything into a business plan for trading success. If you like to be together with us learning this, we are open for new students, and we want to put an end to all these guessing with moving averages and all of that, because it's past oriented, not going to get you to the probabilities you really want to have. We want you to guide through a chart where there is winning opportunities to the upside, to the downside with the right strategy. We have a beginner's program which is called tradecolors.com. If you want to do a lower investment, we always allow people to upgrade, acknowledging the tuition paid for Trade Colors. And all of that, if you want to come together with us, give us a notice either by an email, contact@neverlosstrading.com, or call the office in Florida, 866-455-4520. We are happy to working with you and also going through an individual hour with you if you're serious, where we can show you how the chart performs. You make the calls, we count afterwards the good trades and the bad trades, and we will jointly see that we are going to be at a high probability trade setup. So with that, we want to invite you in. Learn how to trade stocks and their options, repair the trades, and find high probability setups continuously so that you can trade with a high performance rate for high returns. We are looking forward to hearing back from you. Thank you very much for your attention.